Hello, everyone. Welcome to the stock specific class here for Thursday, November the 17th. If you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to jerry@traderspro.com, and I'll be happy to answer those for you during the week. Just keep in mind that I usually answer emails in the evenings, kind of have a time set aside to do that, so just be a little bit patient to get a reply back. I'd like to be able to do that to where I'm not rushed and I can give a good reply back to your emails. It's not something that's real quick, and unless it's a quick response is needed, I'm not going to over elaborate if I don't need to, but I want to make sure you get good help in answering your questions. All right, let's get started. As far as the direction alerts go, with the market selling off a little bit, here recently, it's kind of alleviated that overbought condition that we were starting to get into. We're still elevated though, to where it wouldn't take much of a move higher to push us back into that overbought state. Again, long-term signal, we're still in a bear market. Momentum, you can see, is backed off of that extreme reversal risk area, but like I said, it wouldn't take much of a rally to get back into that. When I get to the charts, I'll show you a little bit of what I think could take place, especially after what's kind of happened today, a little bit of a bullish reversal today, and what I'd be looking for in the next few days based off of that. The breadth indicator right on the borderline of the extreme and high, but it has backed off. It was a little bit more in the extreme range. Again, same thing. If market rallies back up, it could push us back into that extreme range. Actually, this lines up pretty well to what I think the market might do over the next few days. And then again, we'll take a look at that here in a second. Sentiment's still very, very high, and it's important to keep that in mind that although we'll look at the VIX here and see how close we are to an area where we really have to be concerned, but this is the same thing. We still have room to be able to push a little bit higher, but we're very close to getting to an area where the market could start to pull back a little bit, not necessarily go retest new lows, but it could end up doing that. I mean, there's always those possibilities that we talk about. But a lot of that you kind of discover as it unfolds. How sharp is the initial selling? How much is the concern of the selling? Is that big spiking up of the selling? Things like that. You start to look forward to as far as expectations as to whether or not it's going to be a bigger pullback or just a normal pullback within the uptrend. And by the way, that's always important to gauge, because if you're in an uptrend and the selling looks like it's controlled, it's not really panicky, then it's probably just that pullback within the uptrend. It means it's actually very bullish when you see the market sell off and it's not creating concern. It tells you that, hey, this is just the normal part of that stair-step process. These are dips I can buy into, things like that. If there seems to be a little more fear in the selling or panic in the selling, then obviously it likely means there's a lot further to drop, and you shouldn't be buying the dip in that situation. So that's why we talk about these things. We can't know for sure, and we'd love to know for sure. And I'd love that I wish I could be the one to tell you exactly what's going on when you tune in each week. But hopefully what you're learning by now is that it's all about analyzing and managing probabilities, and that's all we're trying to do is kind of gauge those probabilities as we go through this approach. And so this is a pretty normal approach for those that are new. We're just trying to see what kind of conditions we're in the market before we start to make our trading decisions. Buy-sell ratios, not too extreme. We've kind of come back a little bit closer together here, but even at this range right here, we weren't overly extreme, although close. And again, this is telling us what we already know. We could still rally up a little bit further from here, but if we did, we'd probably get a little bit closer to these extreme ranges that we'd have to pay attention to. And this sentiment indicator actually did hit the sell, and we did pull back a little bit in the market recently, probably off of that. Again, could it come back up again and push back into that area again? Could the market rally back into that area again? Yeah, same thing that we've been talking about with the previous alerts. So all of them are kind of pointing to the same thing. Now, is it possible we could drop from here? Yeah, I mean, we're not in an extreme overbought state, but it doesn't mean that you only sell off when you're in an overbought state. And one of the things that I was talking about on Tuesday was we had that bearish reversal day on Tuesday. We got to get the opposite. Yes, Tuesday we had the bearish reversal day that indicated that maybe we weren't going to get to that resistance area on the chart. In fact, let's get to the charts here. And then today we have a little bit more of a bullish reversal that puts that back in play that maybe we can. So we had on Tuesday, we had this bearish reversal. Remember the resistance area that I've been focusing on. And again, for those that are new, you might not be aware of this, but by the way, you can always go back and review these recordings. Go to the TradersPro page on YouTube, subscribe, and you'll get access to these recordings as well as a number of other training recordings if you go to that page. But you can see what we're really focused on here is this downtrend line. And we rallied up close to it right here, then we started to reverse. And my thought process was a lot of times with these trend lines, when they become established like this one is, everyone starts to pay attention to them. Everyone can start to see them. You don't have to be a technical analyst with years of experience to see that line. Now back up here, it's not as easy to see, and so probably more experienced technical analysts would have been able to kind of find this little resistance area by extending that line out. We don't have a lot of data yet at that point. We only have these two areas to create the trend line. You have to have at least 2 points to create the trend line. So there might have been more experienced technical analysts would have kind of noticed this one back in here, but now that you got 3 in place, anybody can see that that could act as resistance against us. So sometimes what happens is either the market, because the market's not going to allow the majority of people to benefit from that. I mean, if you know where the market's going to reverse, the market's going to reverse right here, then the market's not going to allow that, and it's either going to reverse earlier than you're anticipating, which is what I thought was taking place on Tuesday, or possibly it extends a little bit beyond it, where it overshoots it a little bit, so you think it's getting broken, and then it comes back down. Or maybe it does hit that area in reverse, but this is what we'll be looking for, is when we get into this area right here, do we see kind of what we saw on Tuesday? Do we see a bearish reversal candle take place in that area? If so, we want to, take advantage of that or make decisions based off of that. What I did on Tuesday was I hedged with the SOXS inverse ETF in case we dropped. We'd make some money on that would go up in value. I'll get to that when we get to portfolio. I added the SARK yesterday, and I'm thinking about getting out of both of those with today's what looks like a bullish reversal today. So anyway, the area where that trend line is I have 407 because 407 is where the 200-day moving average is. Now we don't have moving averages here on the software, but if you have another charting service, find where that 200-day moving average is. That could act as resistance. A lot of traders will use the 200-day moving average. But that trend line kind of hit right at about 410. So I have the 407 to 410 range as my resistance area. You also have this previous area of resistance near that same area that could act as additional resistance there. Now, it's important to point out the Dow has already gone above that September high right there. So, we're still trying to figure out, is the Dow leading right now, which it typically doesn't do, or is it just outperforming, but we're still setting up for another move lower with the NASDAQ really lagging behind. It seems more likely to me that's going to lead to at least possibly a retest of the lows at some point, if not going lower than that. But again, it's important that we don't get caught up in trying to predict the future. All we're doing right now is trying to analyze probabilities, analyze what the behavior is, knowing the behavior can change at any moment, and we need to change with it if it does. And what I try to do in these classes is point out what are some of the signals that would indicate that change of direction. In this case here, obviously we had this bearish reversal candle. I was wondering if maybe this was a bearish ABC pattern, and it still could be. Even if we move a little bit higher, we could still be in the C leg of that. And I thought maybe we could move over. And I really thought that was this morning when we got down off of that kind of bearish news from one of the Fed presidents was talking. You're seeing a lot of Fed presidents talking this week, and so you can get everyone's listening to every word they say and trying to get hints as to what they might be doing. Remember, the Chairman Powell is the leader of the Fed and makes the ultimate decisions. But there's a governing body of Fed presidents that all give input as to what they think we should do, what the Fed should do. So these Fed presidents, during this period of time when it's the non-quiet period of time for them, they often go out and give speeches. And just like whenever the Fed chairman speaks, everyone tries to listen to every little word they say and see if they can anticipate what the Fed might be doing. So when he came out as being very, very hawkish, saying we're just getting started with these rate hikes, it kind of freaked the market out. Now, again, this is why I don't get too caught up with news and with noise with these talks. I don't know what he was talking about and whether or not that's good, bullish for the market or bearish for the market. And even if I did, I can't move the market in my direction that I think it's supposed to go in. So with all these things that come out, they can be overwhelming. I get it. Sometimes the best thing to do is just turn the TV off and just focus on the charts, what the charts are doing, because that's the reality. It doesn't matter whether that Fed president is bullish or bearish. It's what the market thinks, and obviously the market initially reacted as bearish, but it's come back up. Now we still have, and it's important to understand that I'm doing this analysis based on what I'm seeing right now. We've seen this happen before where we fade into the close and it looks a lot more bearish than it did at this point. Right now, it looks like a bullish reversal candle. We opened down here. We shook off that negative news. It looks like we could close higher than where we opened. But still, we're still lower than yesterday. So the markets are showing that we're down still today, but it's not telling the whole story. We're up from where we opened, and that's a bullish momentum shift. Now, whether that continues or not, that's the question. Typically, these are one of the stronger reversals, just like that bearish reversal candle. I'm going to erase these lines. Hopefully, you have them kind of jotted down here. This was this gives a strong indication that we should go lower. It doesn't say that we're going to trend lower from this. These candle patterns are very short term. It was saying that we opened higher on this day, on Tuesday. We closed lower than where we opened. Here's where we opened. Here's where we closed. We closed lower than where we opened, but still higher than where we closed down here at the day before. So it was showing that Tuesday was an up day, but unless you know how to read that price action, it was actually showing momentum shifting to more bearish. And so what happened yesterday? Well, we did move down off of that. There's a high probability with that price action we will move down off of that. And we did. Now, we also moved down again today, but now we're getting the opposite. We have a bullish momentum reversal where we open lower. We again, assuming this is how it looks at the close, we're trading higher than where we opened, but still lower than where we closed the day before. Very short term in nature, which means what should happen is that we should move up tomorrow off of that price action. Now, maybe it just opens higher tomorrow. Sometimes it does go higher the next day, but it's just higher at the open, and then maybe we get another bearish reversal candle. Who knows? That's why we have to be flexible and adjust based on not only the trend, but what we're seeing with the price action here. So if that holds, that would be a bullish reversal. And what that does, at least what that tells me, is that we still could push into that 407, 410 area up here. That trend line is, and where this trend line is. And and then we have to see what happens here. Do we get another bearish reversal candle? If so, that could mean the start of something bigger. I also anticipate that the VIX would move. If we do move up in this area, the VIX would get down around 20. We'll look at the VIX here in just a second. That's also where these sell-offs tend to happen, is when the VIX gets down around 20. At least right now, that's the behavior. The VIX is relative, meaning you have to kind of compare it to how it's acting over the last several weeks and several months. It's selling off a lot of times when it gets to 20, but 3 years ago it was rallying when it got 20 was high when it got up to 20. We were in a different type of market condition in that situation. So as you're learning to read the VIX, be aware that it's a kind of a relative indicator, which makes it a little bit more difficult to read sometimes. All right, so that's the expectation, is that we should at least start moving back up off of this. Keep in mind too, we're also moving into a historically bullish time of the year. The week before Thanksgiving tends to be a bullish week. Remember, markets closed on Thanksgiving, but it's open on Black Friday, the day after. But it tends to be just kind of a bullish time of the year. Now, that doesn't mean it rips higher in a big way. Sometimes it just barely close higher for the day, or you have small gains. So don't just go in there and buy everything just because it's a bullish seasonality. Never buy or sell based on seasonality, but seasonality can be an additional confirmation to what we're seeing on the chart. The chart looks like we could rally here in the next couple of days, and we're moving into a more of a bullish seasonality week. Then it's reasonable, that for me at least, it's reasonable to assume that means we're gonna rally into this resistance area. Okay. Now, I thought that back here, and then I changed it on Tuesday based on what I saw, and I'll change it again if I see something different between now and Tuesday. By the way, that's an important thing to point out now that it's on my mind. So next week, all we're going to have is the market update class on Tuesday. That will be the only class we have. Thursday's obviously Thanksgiving, and then I'll be off Friday. So just be aware of that for next week. It's a good thing I remember, because it kind of caught up to us pretty quick. I can't believe we're almost near the end of November. Well, actually, we're still in the middle of November, but it feels like we're getting to the end of November already, and it feels like the month just started. All right, so now I really focus on the S&P here, because I really think that resistance area is going to be the critical thing that the market reacts to. Obviously, I mentioned earlier that the Dow was already broke above that. Move this chart up a little bit. That September high. It's been outperforming, but it's also got this high up here that could act as resistance. So, and that's not too far away from where we're at. So this is a little bit of a bullish candle for the Dow. Let's see if it pushes into here and then has a little bit of trouble at this area right here. Who knows though? Maybe it breaks out. That could be significant as well. Although, remember how I talked about sometimes you'll get those overshoots when it looks like the move is pretty obvious. Sometimes the market will overshoot a little bit and then start to drop. Maybe it overshoots this and looks really bullish, and then it drops after that. Those are things that we'll keep an eye on there. But definitely the Dow is outperforming. There's no doubt about that. Qs, they're underperforming. They're well below that September high. This really looks like a bearish ABC pattern to me, but it's still, again, bullish reversal candle today. Maybe it does push a little bit higher up into here. And then, but this is one to watch too. Does this start to sell off pretty strong if the market pulls back again? That's something to look at. Russell 2000, it's again right at that September high. These are the small caps. Indecision candle today, not really a bullish reversal candle, although if the market were to rally off those other candles, this one will probably rally as well. Being this close to that September high, I wouldn't be surprised if the market does rally. If the S&P rallies into that resistance area, that this maybe breaks above that September high a little bit. But these are all things we'll keep a close eye on. Notice though overall, again, the Dow, look at the Dow's rally off of those lows, those previous lows. Get to the Dow here. This looks impulsive. This looks like a sharp move higher. These pullbacks were very shallow. This clearly looks like the Dow wanted to go higher, acting like it wants to go in that direction. Okay. Again, notice how just if you were to draw a line on the bottom, the top of the range and the bottom of the range, it is clearly going up. Look at what we do if we do that with the Russell 2000 here. It's still going up, but look at how choppy. Look at these pullbacks are deeper. This is more choppy. Where the Dow is looking like this is more angled, not quite sideways, but it's kind of in between going straight up and going completely sideways. This is very corrective looking, and it happens a lot of times when I draw that stair step. You know, sometimes it is real sideways on those corrections. Those steps are real sideways, but a lot of times those corrections are like this. That's what the ABC pattern is, but it's kind of a choppy but still downward move. And then when it's done, these are impulsive moves. Impulsive are sharp moves in a direction. This was impulsive. Look how it just went up, 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 up. And like I said, this is acting more corrective, which again, this is more of an impulsive move down. This is more corrective, which would usually lead to another impulsive move down. Now, again, doesn't mean that's what will happen, but it's important to kind of note that both particularly the NASDAQ 100, the Russell 2000. So you look at this as a very choppy or sideways looking. The S&P, kind of the same thing, more choppy. It's only the Dow that looks impulsive. So again, it could mean that these others start taking off and looking more impulsive, or more likely, I think that this is kind of setting up for still another move down at some point. All right, bonds. Bonds still, well, we got a little bit of a pause. They had a big move up yesterday, but it still could be wave A, wave B, wave C of a bearish ABC pattern where we see bonds start to move down. We also talked about, though, that bonds have already been way, way, way down. Is this a bottoming process here? Well, if we start to see bonds move higher, you know, up into this area right into here, now, if you're calling that a wave C, that's a really long wave C. Wave C is now twice the length of wave A, which is usually rare. Usually wave C is going to be about the same length as wave A. It's already a little bit longer than wave A where it's at. If it goes too much further, you got to assume that we're in a trend reversal, or at least contemplate that we're in a trend reversal where this is maybe wave 1, wave 2, wave 3, wave 4, wave 5. And we're reversing that trend. Still don't know yet, but we're a little bit in that critical area there on that, so we'll keep an eye on that. Gold pulled back a little bit today, but it's been on a tear lately, especially with the dollar moving lower. Oil is a little bit of a concern. I've been bullish on oil. I've got a lot of oil stocks in the portfolio, which is what I have to watch pretty carefully here. Went to a higher high here. We've been down. We're down today. I think this low is going to be important because as long as we rally off of where we're at right now, that's still a higher low. But if we dip below that, you're getting a lower low. And now we've already seen a real sluggish oil market through here. I've been kind of holding on to this support area right through here. This is an inverse head and shoulders pattern, and that we're going to start moving back up. Obviously, there's seasonal reasons to be bullish on oil with the oil shortages out there, but it doesn't always mean that at least in the near term, it doesn't mean that the oil couldn't come down in the near term ahead of that. So that's an area I'm going to keep an eye on there, and I might lighten up on some of my oil positions if we break that. But that'll probably be a decision for next week. The dollar continues to fall. It is rallying a little bit today, but it's also trading lower than where it opened. We'll see if this is just a correction here for another move down. We are already a little bit oversold, but we could still get a little bit more of a bounce where we rally up a little bit there. But overall, the trend still is down. The only question in the near term is whether or not it comes up just a little bit further to alleviate that oversold condition and then makes another move down. But the dollar's definitely been looking weaker lately, and the trend looks like it could still continue to go lower. The VIX I mentioned, now you can see it opened a little bit higher today. It's trading back down after it kind of shook off that bad news. I want to go to the VIX, actual VIX chart on another charting service because it'll show you so here's where 20 is right here. We're at 24. We did get a little bit elevated, that bearish reversal on Tuesday spiked the VIX up a little bit. Today it spiked up a little bit off of that initial news this morning, but it's shaking it off a little bit. If the market does rally higher, we should see the VIX continue to move down. But you can see once it gets down to about 20 here, that's an area where a lot of these sell-offs have started to take place. 30 is where the market is fearful, and when it gets to about 33, 34 is where it started to rally. When the fear has gotten up to that level. So again, this kind of fits into that narrative that if we do push into that resistance area on the S&P, it could push the VIX down at least close enough to 20 where we could say that's an area we got to look out for, and then we'll look for any sort of bearish reversal on the chart that might indicate a sell-off is coming. So we're close, and you can start to see a little bit of the concern here. There have been a couple of days where it spiked up a little bit off of, so that's telling me that the professionals are a little concerned with where we're at, and they're not acting overly confident. They saw a reason to go rush out and buy some protective puts with that news this morning. That spiked up the VIX, not a ton, but it spiked up a little bit to show that concern. Obviously come back down, but these little reactions are important to recognize. They could be little hints that there's a little bit concern building here as we move into that resistance area. All right. And, SMH, again, it started to really kind of catch up a little bit here, the chip stocks. Big reversal here. Again, bullish reversal candle of the day. Could it push back into that, back up a little bit further here? Yeah, it could. Which is why I'm going to get out of the SOXS. Now I got into the SOXS right here, and we did make a little bit of money on it coming back down to yesterday. The bullish reversal candle here, I'm going to go ahead and get out of that. Remember, the SOXS is going to do opposite of what this is doing. So if this is going up, it's going to go down. And when this went down, it went up. So it allowed me to make money, a little bit of money as the market dropped, allowed me to make a little bit of money on that drop. And that's the only reason why I'm using them is to hedge, allow us to still be long the market. These are going to go up. I don't have to short the market. If the market goes down, these will go up, and it'll help offset a little bit of losses on some of our long positions that we're in. Transports, again, pull back a little bit of a bullish, possibly a bullish hammer that could form there. By the way, there's a transportation stock we'll talk about today, and is one of the stock-specific charts that we'll go over. Bitcoin, again, looks like it's just consolidating that latest drop. It probably will end up going lower off of that. There's a lot of trouble right now in the Bitcoin markets. Although, as I mentioned a little bit on Tuesday, that these are conditions that are these are the types of things you see at market bottoms. Panic selling that's been happening in Bitcoin or in the crypto market in general. Some of the major crypto companies going under. The FTC is at the one that went bankrupt overnight. That's what you see a lot of times at these bottoms, and that's these are the conditions where it doesn't feel like, if you're thinking about buying Bitcoin, you're probably scared right now. You're like, man, this is crazy. I don't want to buy into something and have it go bankrupt and I lose everything. You're afraid to get in right now, and that's exactly how you should feel at a market bottom. So really, if you really pay attention to what's going on with crypto, as far as just the psychology, That's what I keep talking about needs to happen in the equity markets. And you know, we're not nearly there yet, where there's panic selling that nobody feels like they want to buy. It's scary to buy. You're wondering how much lower could it go. That what's happening in crypto is what we need to see happen in the equity markets for, at least in my opinion, to really feel like we're at a bottom. Now, just because you start to get those feelings doesn't mean you're at the bottom, but you're near the bottom. Could Bitcoin go a little bit further down? Yes, but I'm telling you, if you're a long-term investor in crypto, now again, I'm not an expert in crypto, so take this with a grain of salt. I don't know which is the strongest crypto out there. I'm assuming it's Bitcoin because that's the most popular one that everyone talks about when they talk about crypto. And again, that's my probably naive assumption, just because I don't know a lot and I don't really have an interest in it, to be honest with you. But if I were a long-term crypto investor, that I'm willing to have it go down a little bit further, but I want to start to get in. This is starting a bottoming process. I would find the strongest one out there and start to nibble, start to get in a little bit, because this is near a bottom. Again, emphasize, I don't know where the exact bottom is, but it is exhibiting the conditions that you have at a bottom. And you have to buy when it doesn't feel like you want to buy. But you don't have to go crazy buying. I'm not saying you go take your life savings and go into crypto, because who knows who could go down next. I mean, it was crazy how quick FTX went under, and people thought that was a pretty reliable area to invest in. So, but I just want to point that out, that that's the type of thing I keep talking about. That's the feeling that you need to have at a market bottom. And that's why when you see people on TV saying, oh, the bottom's in and we need to start buying now, or even if they're saying, I don't know if the bottom's in yet, but I'm buying all this stuff up for the long term. You just don't feel like you want to buy at these bottoms, and you definitely don't see it on TV where people are recommending you buy. And that's what always makes me a little bit suspicious when you have a sell-off and everyone says this is the dip to buy right here. That means we're probably not done going down. All right. I'm not going to focus in on these others. HYG, we've been talking about a little bit. I might start to eliminate, because the market's not reacting to this as much as it was before the high yield corporate bonds. I told you it'd be kind of a temporary step here. All right, let's get into specific stocks. I have been focusing a lot on these new buys, just because these are scanning all the sectors right now, and it's telling you which of the stocks are the top stocks overall. And we already know that oil is the strongest sector, but I've also talked about how there's a little bit of weakness in it right now, and maybe I don't want to be overweight in oil. So are there other areas, other strong stocks out there I could consider? I think I mentioned this one on Tuesday, but I still like it. Now this is a transportation stock, TNP. Maybe I didn't talk about this on Tuesday. No, I didn't, because it didn't have a buy signal yet. But this looks like a cup with handle type formation. You got a little bit of the cup formation, a little bit of the handle right here. Again, you could wait for the breakout. That wouldn't be a bad thing to do. The rule of thumb on a cup with handle pattern is when it breaks out, here's the clear resistance area right here. When it breaks out, it'll have a tendency, not always, but there's a tendency for it to go up the same distance as the top of the bowl to the bottom of the bowl. We could take that distance there, project it upward, and that gives you a little bit of a minimum target area, again, assuming it does break out. But that pattern looks pretty good. Another one I like is, let me go back to the muscle stocks here. This PWR, Quanta Services. This is an engineering. It's in the construction sector. 92 strength rank. Again, it looks like it's in the process of maybe forming a cup with handle formation. Maybe consolidating a little bit right here. You likely wait for the breakouts here, because this could stay sideways for a few more weeks and form a more distinct handle. But this is definitely one you want to have in your watch list and wait to see if it breaks out. Again, if it does, it could go up about the same distance as the top of the bull, the bottom of the bull. Another thing to point out with this, it doesn't mean it goes there directly. It doesn't mean it's going to go straight up that distance. It could take weeks or months to kind of work its way up there. And it doesn't mean it has to go exactly there. It could go beyond it. It could go a little bit shorter than it. But that's why we call it a rule of thumb. A rule of thumb means it's not exact. It's not a law. But it happens enough to where you want to pay attention to it. It has a pretty strong probability of behaving that same way over time. Another one I like in that list is in that new muscle stock list, that new buy list is Kroger. This is under consumer staples, or actually under retail, but it's kind of a consumer staple stock as well. This is the grocery store, kind of a boring, but this is what people, the investors, drift to during times of recession or close to where it looks like we're heading towards recession. People are going to shop no matter at grocery stores, no matter what the economic conditions are, and so these tend to do very well or outperform during these periods. But obviously, it's dipped a little bit right here. But what I'm really focusing on is it off of this low right here. You had an impulsive move up, and then this is looking corrected. So it looks like we're kind of on the right side of the bull. And you'll notice I do this a lot, where I look to either get in on the right side, where it looks like we're coming out of the bull on the right side of the bull. This is a good entry point. When we get back up to here, a lot of times we'll consolidate, and that's that cup with handle formation that we just saw examples of. I love these types of trades. Again, it doesn't mean it's going to head back up that direction. We still have to manage it, but usually there's a pretty good probability that that type of trade will work out. And again, I'm talking about these mostly because, again, we have a little bit more bullish market conditions right now. A lot of these moves could be temporary, and maybe we just rally for a few days or what have you. But the bottom line is that we don't want to be putting too much capital work in this environment. We're still in a bear market, and so you want to be mostly in cash, and I'm mostly in cash in the portfolio. But these are some ideas of if you are looking to add something, what are some ideas of good patterns to add? Now, we are a little bit low on the strength rank, and this next one will be a little bit lower than that. I usually don't like to dip below 90, but these are pretty well-known names as well. And another one is along the same lines here in that new buy list is Johnson & Johnson. Obviously, everyone's heard of Johnson & Johnson. Same thing, kind of a consumer staples type trade, although it's also considered in the medical sector here. But they also have, those products at the grocery store the medical products that we buy all the time on a consistent basis, pain relievers and things like that. So, but I like kind of the same thing here. It looks like we had this downtrend right here. We broke the downtrend line. This is a little bit more of an impulsive move up, and then this was looking a little bit more corrective. And I'm looking to see if we can break out and go higher out of that. One more, I am going to go into the sectors here and go to consumer staples. I like this Corteva right here, CTVA, 93 strength rank. And what I really like about this, again, is very similar to Archer Daniel Midland, which I got into. This is also in that same group, same sector, agricultural, consumer staples. But it broke out, and then it's come back in kind of a choppy fashion to retest the breakout. A little bit of a bullish candle right there off of that low. Looks like it's getting ready to go higher again. So that's one I like as well. All right, real quickly here under the portfolio. Just a second here. Just 1 second. Sorry about this. All right. Out of the portfolio here, let's take a look at the positions. As much as a little bit concerned about energy, I don't want to just get out of these just because, um, I'm worried that oil could drop a little bit further. But my stop on this natural gas, my stop is down below here. I'm willing to kind of still give this a little bit of room to kind of work its way back up again. Same with MPC, another oil trade. This one still looks like it's holding up very well. This is a refining stock. Tech, it's basic materials. Still, I got my stops down below here, so it's still kind of moving sideways. A little bit of a bullish candle today, though. We'll see if this starts working its way back up. So a lot of these have been a little bit sluggish lately, which you would expect in these types of conditions. You're not going to have a ton of stocks really taking off for long periods of time. I am a little bit worried about this coal stock, CEIX. My stop is right here. We're very close to it. This is probably going to be the first one to stop out, but I'm going to wait to see if we stop out. I'm not going to just assume that it's going to stop out, but it could, if it drops below that, closes below this low tomorrow, then keep in mind I'll probably be stopping out of it. So just be aware of that. Or Monday, before our next class, if it breaks below there, I'll probably be stopping out of that. If anything, just to reduce the risk exposure in the energy sector. I don't want to keep that much risk in that sector if I can. CF has just been moving sideways, although my stop is down below here, so I'm going to allow it to kind of keep doing that. But you can see we're stuck in this range here. Hopefully it gets moving here pretty quick. Silver, I already knew it was getting a little bit overbought. We were a little bit over here, a little bit in the extreme reversal risk range. But I still want to have a little bit of exposure in this area here. It did gap down today. My stop is down a lot further, so we'll see if this can start to work its way back up again. But that's probably the biggest move down of the portfolio. Archer Daniel Midland, this is very similar to that Corteva stock we just looked at. It retested the lows here. I got in right in here. My stop's down below this range. I can't remember where it's at, but it's down below this range here. Hasn't really done anything in the last few days, but no reason to get out of it. And then these are the ones I'll probably get out of. This is SOXS. You can see that I got in on this bullish reversal candle. It was a bearish reversal candle on the market. We made money on this thing going up yesterday, but now we're getting a bearish reversal candle, and all I'm using these for are to hedge. So I'm going to exit this one, and then I added that SARK yesterday. We're still up on this one today even, but with the market looking, and again, I'll check these at the end of class here real quick just to make sure the market looks like it's going to reverse. But we made some money. I made some money getting in yesterday even with this move up higher today. Not a lot. It'll be very small gains, but at least it hedged just a little bit. It'll offset a little bit of the losses, particularly in silver that we saw right there. And that's the point, is all we're really doing is we're just trying to see if we can't make a little bit of money while we're waiting for the bear market to end. These are not normal techniques I'll use in a normal bull market. So I get a lot of questions on that lately. How come you're not getting in and out on the signals alone, or some of this other stuff? Well, to be honest, in a bear market, And especially if you're in a bear market, you don't know what you're doing, almost all your money should be in cash. You should be waiting for the market to bottom or show some of those bottoming signals. Now, in the meantime, could you still find outperforming stocks? Yeah, and that's what the software is for, and that's probably why you bought the software, is you want some ideas, you want to do something, and definitely if you want to do something, you want to find the stocks that are outperforming, okay? But the normal trend analysis, where normal trend signals aren't going to work as well in a bear market, or you're not going to have as many stocks to choose from. That's the biggest thing, is that when you're in a bull market and you've got 80 to 90% of the stocks going up, then to find a stock that's going to go up is pretty easy, right? It's like, okay, maybe I don't find the stock that makes the biggest move, but I find a stock that makes a move up because everything's going up. When you're in the opposite of that, when 80% of the stocks are flat or going down, and you're trying to find the 20% that are going up, or the 15 or 10% that are going up, it's just the probabilities of finding that are smaller. Now, the software helps you see what those 10 or 15% that are going up, which stocks they are. That's the big benefit of the software. But even then, in bear markets, how much longer are those stocks going to outperform? Are they eventually going to get dragged back down, or are they eventually are you getting in right when they're done with those moves and they're going to pull back a little bit? Those risks increase a little bit more. And that's why, to manage that, we mostly want to be in cash, and we are. Half my money is in cash, and it's going to get more than that because I'm going to get out of these two hedges right here, these two trades I'm hedging, which is going to leave me this exposure. And even with that exposure, I focused on what's been outperforming the market. Well, if you go to the sector tab, what's at the top of the list? What's been outperforming the market? Oil and energy. So what's my biggest exposure in the portfolio? Natural gas, oil refining, and one of these is CEIX, which is the coal one. It's a little bit too small for there to come up on the screen there, but actually it is this one, because this is CF right here. So this is the coal trade, and even then, notice how I had a smaller exposure to coal than the other two, and that's the one I might get stopped out on. Okay. So I'm glad I had that smaller exposure. So the point is that what I'm trying to do right now is just do something so we don't have classes where we're not talking about anything. I do want to. My job right now is to point you in the things that I like in this environment, but how I'm managing it is I'm jumping in and out a little bit quicker, because these trends aren't lasting that long, or as long as they normally do in bull market conditions. And I also introduced these inverse ETFs that I'm using whenever the market looks like it's going to go pull back. I don't want to just get out of all my long positions, but I also don't want to give back all the profits I've made on them because the market's going lower. So this has allowed us to make money when the market has dropped. And now when that happens, usually it means that these are making money, but I'm losing a little money somewhere on these long positions. And that's why we're just kind of slugging back and forth. We were up to 139. My goal was to be at 140 this week, but we've gone up to 139 recently. We've been down to 132, and we're just kind of, now we're back to 137. We're just see if we can't grind out something. If I could get up to 150,000 before the bear market's done, that'd be a great thing, because now I have all this cash to deploy, and I actually made some money during the bear market. It was hard because you're all over the place doing stuff. We worked twice as hard, but we're able to grind out some gains to make us even more money to deploy when that bottom takes place. So just stay tuned, and if you want to follow along with what I'm doing, great. If not, you feel safer just sitting in cash, or you want to keep the majority of your money in cash, that's recommended. And then when I see the signs of a bottom and it feels like we're really going to start taking off, obviously the classes are going to be different, and we're going to be focusing a little bit more on the signals and in trailing stops, more detail on trailing stops and things like that. Okay, so just be aware of that. All right, so let's go ahead. I'm going to go ahead and get out of these then. SOXS. All right, let me go back to portfolio here. I need to go over here to sell. All 250 shares. The current price is 35.63. So this is showing a higher price in the tab right now, but I'm looking over here at the current price, which is 35.63. Now I got in at 31.95, so just off of that move over the last 2 days, I made almost $1,000 just hedging right there. Now I lost a little bit of it with the other some of the other trades. I lost some money on the other trades, but that's why I use them to hedge a little bit here. So let's go ahead and get out of that. Made a lot less on SARK, but let's get out of this one as well. 58.92 is the sell price. I only made $235 on this one because I got in this one yesterday. I'm getting out of it today. But that's, you know, both trades combined, it's over $1,000 I hedged there, and I'll take that. All right. Take a quick look at the SPY. So we're fading a little bit off the highs. That'll be important to watch going into the close. If we come all the way back down to here or so, that would actually be a little bit more bearish. Actually, it'd be indecisive too. It could still go either way at that point. The fact that if it does close higher than where it opened, is still somewhat bullish, but I would lose a lot of that momentum of the reversal. So we'll see how it goes. I'll still probably stay out of those inverse ETFs. You know, it's just, well, let me take a look at this VIX too real quick. Yeah, the VIX is actually trading lower than where it opened. So the VIX is showing no concern with this little bit of fade that's taken place. I think we're okay there. All right. That's all I have. Have a great weekend, and we'll see you Tuesday for the market update. And again, keep in mind, that'll be the only class next week is that market update class. But have a great weekend, everyone. We'll see you then. Bye now.